By the summer of 1815, one family could move gold across a continent at war faster than the government's fighting, that war could move their own soldiers. That's not a metaphor, it's a documented fact, verified against the private ledgers of a bank most people only know through a handful of quotes it never actually said. The real story doesn't need the fake quotes. A Frankfurt coin dealer built a machine designed to survive collapse, currency crashes, occupation, and confiscation. A machine made of 5 banks, 1 bloodline, and a set of rules so rigid they outlasted the family that wrote them. Twice that machine got broken, once by a dictatorship, once by a democratically elected government. Both times, it came back. This is how it was built, how it worked, and what it actually cost to keep it running for 200 years. Start in Frankfurt, in a street called the Judengasse, a few hundred meters of housing where the city's Jewish population, several thousand people, was legally required to live. Residents couldn't leave after dark, couldn't walk in public gardens, couldn't gather in groups larger than 2. It was one of the most restrictive Jewish quarters in the German states. Mayor Amschel Rothschild was born there in 1744. As a young man, he was sent to Hanover, apprenticed at the banking house of Simon Wolf Oppenheimer, where he learned bill discounting, currency exchange, and the coin trade, skills with almost no ceiling for a Jewish merchant in the Holy Roman Empire, because banking sat outside the guild restrictions that blocked Jews from most other trades. He returned to Frankfurt around 1763 and built a business dealing in rare coins and antiques. By the late 1760s, he had a client most coin dealers never got near, Crown Prince William of Hesse-Kassel, heir to one of the largest private fortunes in Europe, built largely on renting out Hessian soldiers to fight other countries' wars. In 1769, the Crown Prince granted Mayer Amschel the title of court factor, official financial agent to the court. It wasn't power yet, it was access. Access to a client with more liquid wealth than most kingdoms, and a direct line to how that wealth got moved, lent, and hidden. For 30 years, Mayer Amschel built trust with that one household. Then, in 1806, that relationship turned into the event that created the Rothschild banking network as we know it. In 1806, Napoleon invaded the German state of Hesse. William IX, the same client Mayer Amschel had served for decades, now the Landgrave of Hesse-Kassel, backed Prussia against France. He lost, and he had to run. The problem? William was sitting on one of the largest private fortunes in Europe, and Napoleon's army was about to occupy his territory. Whatever he couldn't hide would be seized. His financial advisor, Karl Buderus, made the call that mattered: hand the fortune to Mayer Amschel Rothschild. Not because Rothschild was the biggest banker in Germany, he wasn't, but because he was the one banker positioned to actually move the money out of reach. Mayer Amschel routed part of that fortune, reportedly several £100,000 sterling in value, to his son Nathan, who by then was established in London. Nathan converted it into British government securities and bullion, assets an occupying French army in Hesse couldn't touch, in a country France was actively at war with. This is the moment the family stopped being regional court agents and became something else, an operation that could take a fortune, split it, move it across a war zone, and reinvest it in a hostile country's own government debt, legally, quietly, and without losing a shilling of it to the war. William IX got his fortune back after the war, with growth on top of it. And the Rothschilds had just proven, to one of the wealthiest men in Europe, that they could do something no single national bank could: get capital out of a collapsing state before the collapse finished, and put it somewhere safer, faster than anyone was watching. That proof of concept is what the next 15 years of expansion was built on. What Mayer Amschel built next is the part most retellings get backwards. It's usually framed as a father sending his boys out to expand the family brand. The actual logic was closer to engineering a distributed system, so no single point of failure could take the whole business down. By the 1820s, 5 brothers ran 5 formerly separate banks: Amschel in Frankfurt, Nathan in London, James in Paris, Salomon in Vienna, Karl in Naples. Each house was independently licensed, independently regulated, answerable to a different government. But capital moved between them constantly, on terms renegotiated every few years inside the family, and profits were pooled. No single monarch, war, or bankruptcy in any one country could touch the capital sitting in the other four. If Vienna froze, Frankfurt didn't. If Paris got seized, London kept moving. That structure paid off almost immediately. Nathan's London house didn't fund both sides of the Napoleonic Wars. That's a popular exaggeration. What it actually did was become the operational backbone of Britain's own war financing. From 1814, the British government contracted N.M. Rothschild and Sons to supply the Duke of Wellington's army with gold coin in the field. A real, documented commission, not a myth. Wellington's troops were fighting on the continent, needed hard currency and multiple denominations to pay for supplies and wages as they advanced. And Britain's own treasury had no efficient way to get gold coin converted and delivered across a war zone France was actively blockading. Nathan solved a logistics problem, not a battlefield one. Using his brothers as a relay, Amschel in Frankfurt, James newly arrived in Paris, the family built a private network of agents and couriers that could source coin, convert currencies, and physically move it to wherever Wellington's army needed it next, faster and more reliably than any government department of the time. That same network is also the source of the most famous and most distorted story in Rothschild history, Waterloo. The popular version says Nathan learned of Wellington's victory a full day before the British government, walked onto the London Stock Exchange, and started selling government bonds, faking a British defeat to crash the market, before quietly buying it all back at the bottom and reaping a fortune when the real news broke. It's a great scene. It's also fiction. Historians who got access to the Rothschild archive, including the historian Niall Ferguson, and independent research published by the Rothschild archive itself, found no evidence Nathan manipulated the market, faked a defeat, or made anything close to the fortune the legend describes. The story traces back to a hostile pamphlet written decades later, one with open anti-Semitic intent, and it kept getting repeated because it's a better story than the truth. The truth is quieter but more useful if you're trying to understand how the family actually operated. Nathan's courier network did get him word of Wellington's win roughly a day ahead of the official government messenger. That part holds up, confirmed by a surviving letter in the family's own correspondence. Nathan then bought British government bonds, betting the market would rise once the win was confirmed. It did, over the following months, not overnight. He made a real profit, just not a mythical one, and not through sabotage, through having a faster, more reliable information network than the state he was serving. The mechanism was never a single dramatic trade. It was infrastructure, private couriers who beat government messengers as a matter of routine, and 5 independent banks positioned so information and capital could move around whatever border, blockade, or bankruptcy stood in the way. The family reinforced that structure at home, too. Mayor Amschel's will kept ownership of the bank inside the male line, and for generations, Rothschild descendants married within the family more often than was normal even among European nobility. A deliberate move to keep control of the business from diluting into outside hands. And unlike most dynasties of the era, they avoided parking wealth in things a mob, a creditor, or an army could physically seize. Land, palaces, gold reserves sitting in one vault. Their capital lived mostly in government bonds, stocks, and short-term credit. Assets that could, in theory, be moved, sold, or reallocated across borders faster than they could be confiscated. 60 years later, that same operating model produced one of the cleanest, best documented examples of the mechanism at work, the Suez Canal purchase. In 1875, the poor, bankrupt Egyptian Khedive put his 44% stake in the Suez Canal Company up for sale. British Prime Minister Benjamin Disraeli wanted it, but Parliament was in recess, and there was no time to raise public funds through normal channels. He turned to N.M. Rothschild and Sons, which advanced the British government £4 million, on short notice, without collateral beyond, as the story goes, the British government itself. The loan was repaid within about 3 months. According to the British Parliament's own record of the transaction, Rothschild's fee for the service came to roughly 15% annualized. A real, recorded price for being the only private institution in Europe that could move £4 million on a few days' notice. That's the mechanism, stripped of legend, not secret control of governments, but being structurally the fastest, most liquid, most cross-border capable capital source in Europe, at a moment when speed itself was the product being sold. For all that engineering, the machine had a blind spot. It could move money faster than any government, but it couldn't move a person out of a country that had already sealed its borders. In March of 1938, Germany annexed Austria. Louis von Rothschild, who ran the Vienna house, was arrested at Aspern Airport as he tried to leave. His brothers had gotten out just days earlier. The bank was placed under compulsory administration within weeks and sold off to a German competitor the following year. Louis himself was held by the Gestapo for 17 months in 2 rooms of a Vienna hotel, while his family negotiated his release. He was freed in August of 1939 only after a ransom, reported by contemporary press at the time, to run into the tens of millions of dollars, one of the largest ransom payments for a single individual on record. The Vienna branch never reopened. It wasn't the first crack. The Naples house had already closed in 1863, after Italian unification left the family on the wrong side of the new government. Frankfurt, the original house, shut down in 1901, not from any external attack, but because the mail line there had simply run out. And it wasn't the last one either. In 1981, France's newly elected socialist government nationalized 39 banks, including Banque Rothschild. By then, the last independent Rothschild-controlled institution in Paris. The family was legally barred from using its own name in banking for the next 5 years. 4 branches gone by 4 completely different mechanisms: a lack of heirs, a change of government, an occupying army, and a democratic vote. The 5-city structure that had once made the family nearly unreachable by any single crisis had, over more than 180 years, been picked off one branch at a time, proving that diversification protects capital far better than it protects people, institutions, or a family name. What's left is the part the legend usually skips, because rebuilding is less cinematic than the conquering. After the 1981 nationalization, David and Eric de Rothschild restarted the French business almost from zero, using an old, unrelated holding company called Paris Orléans as the legal shell, since they couldn't even use their own name until 1986. In 2003, that rebuilt French business merged with the still independent London house, N.M. Rothschild and Sons, under one holding structure, Rothschild & Company. In 2023, the family took the company private again, buying out public shareholders and pulling it off the Paris Stock Exchange. Today, Rothschild & Company reports roughly 2.9 billion euros in annual revenue and close to 600 million euros in net income, with its wealth and asset management arm overseeing more than 100 billion euros for clients. Figures the company itself now publishes. A level of transparency the founder, operating out of a Judengasse coin shop, never had to deal with. The company that exists now isn't a 200-year-old machine running on autopilot. It's the 5th or 6th rebuild of a structure that kept getting dismantled by war, by bankruptcy, by dictatorship, by an election, and kept getting rebuilt using the same basic principle Mayor Amschel worked out in 1806. Never put all the capital or all the control in one place a single government can reach. That's the actual inheritance, not secret global control. A 180-year case study in what it costs, generation after generation, to keep rebuilding a financial network every time the world tries to shut it down. If you made it this far, drop a coin emoji in the comments. It's how we find out who actually watches to the end, not just the first 30 seconds. Subscribe if you want more of these. Real financial mechanisms behind the families and institutions everyone's heard of, but nobody's actually verified.